pointed out, it's earnings that are most important from an equity return standpoint, and over the long term, that's what matters. So let's talk about earnings itself. DCM Shriram is the first management on the show. Reported a good set of first quarter FY25 numbers after some quarters of underperformance. They witnessed strong margin expansion. The chemicals segment revenue jumped 18%. So to discuss this and more, we have with us Amit Agarwal, who's the ED and Group CFO of the company, joining us now. Thanks a lot, Amit. Always a pleasure speaking with you. First up, let's talk about the outlook for this year itself. I mean, you've had a good start to the first, the first quarter has been a good start. What's your overall outlook for the year across all the segments and margins in terms of revenue growth and margins, if you could give us a sense?
See, for the year as a whole, we expect, on the cost side, what we've seen in the Q1 as well, that the major benefit that has come primarily because of the costs. The costs have come down, and we expect the costs to remain stable going forward as well. So we do expect that vis-a-vis last year, our performance should be better this year.
Okay. So can you just quantify that when you say that your performance will be better as compared to last year? Give us some numbers. What are you working with?
So it is difficult, Ekta, to give the exact numbers given the kind of businesses we are in. That is point number one. Because, there are multiple factors which are not in our control in terms of prices and even in terms of some of the inputs. And also, the expansions that we are doing, two of our expansions have come online in Q1, and two more will come online between Q2 and early Q3. That will also add, but it will also depend on, how we are able to ramp up and things like that. So that gives me confidence that we should have a better year. But in terms of quantifying, it will be a little difficult.
All right, so let's talk about... Okay.
Yeah. Just to follow up on that, FY24, you saw a decline in terms of revenue. Your margins were 9% versus 14%. While you can't quantify numbers, and you can't quantify it, are you going to see a, significant amount of growth this time round? Is it going to be higher than single digits? If you can give us a range in terms of what the single digit growth would be, if that's the case, and if in case there is a margin improvement, do you get back to FY23 levels or do you improve from FY24 levels? Give us a ballpark of what we can expect.
So we will definitely improve from the FY24 levels. And I can also see that it won't be FY23 levels. It will be lower than that. So the FY23 was, I would say, a windfall gain where all commodities were through the roof. So I don't expect that to happen. So we'll be lower than FY23, better than FY24.
All right, that gives us a sense. Let's talk about individual segments now, because you spoke about a bunch of segments. The chemicals business, that led to the growth in the first quarter. So we wanted to understand the cycle, where we are in the cycle. I mean, do you foresee further improvement here from what we saw in the first quarter? And, the higher volumes, 18%, that was lower, offset by lower prices. Where do you see this volume price mix be towards the end of this year?
So we have seen prices improving. So my sense is that prices have bottomed out, what we saw in Q4 of last year. So prices have bottomed out. They should be stable to improving is what our estimate is. But, these are commodity businesses, so, it's very difficult to give us exact sense on that. But what is more important for us are two things. One, what's happening on the cost side. So the energy prices are lower. So unless global event happens, which, rakes up these prices, we are confident that our costs will remain low. So we have seen almost 20-25% dip in our variable costs. So that is important. The other thing which is important for us is what's happening on our growth. The projects that were under implementation, now they are getting on track. So two of the expansion projects are already in place, as I mentioned. Two new products are coming on track in the first half of the year. And that is what is going to drive growth for the business.
Okay. Can you give us a sense in terms of the sugar margins and the segment there? The margins continue to be under pressure. Would a possible demerger be on the cards?
See, in terms of sugar margins, a lot of it is policy driven, right? Now, there were two policies which impacted us. One was on the increase in cane price for the UP, which led to higher cost of production. And the selling price increase was not commensurate with the increase in costs. That was one which impacted the margins. The other was that the exports of sugar was banned. Now that led to a volume impact as well as a margin impact. So these are the two key reasons why sugar did underperform versus same period last year. But given that we have this ethanol business, I think that has been stable. We had better volumes. That business is doing good. Now, to your question on demerger, I think that's a decision which we definitely talk about internally in the management. Board will take a call at the appropriate time.
Right. We'll ask you to just hold on to your thoughts. We'll come back to you and discuss about your numbers in just a bit, because at the bottom of your screen, again, we have numbers flashing in. It's earnings season. So these are numbers coming in from Bajaj Finserv, where the total income has grown about 35%. We've seen net profit grow by about 10% as well. Of course, on a consolidated basis, it would include the numbers of Bajaj Finance, which were reported yesterday already, as a result of which that stock is lower too. But as of now, the two details that we have right now: total income growth of about 35%, close to around 31,480 crores on the top line. The bottom line increased by about 10%. That stock lower by about 2%. We'll dip into these numbers once again, as and when we have more details, perhaps when the presentation is uploaded to the exchanges as well. Let's get back to our conversation with the management of DCM Shriram. I wanted your thoughts on two things. One, you said that there is capex coming in towards the end of this year. Is it the same one as the epoxy resin and downstream products, where you had earlier indicated that the asset turns could be around 1.5 to 2 times? This was 1,000 crore capex. Is this the one? If yes, then maybe the next financial year looks a lot better for you, FY26 that is.
So what I am talking about is on the feedstock for epoxy, which is epichlorohydrin. That project is coming up in this financial year. And hydrogen peroxide. These are the projects which are very near to commissioning. As far as epoxy is concerned, that is about 2 years away.
And the advanced intermediaries one?
Pardon me?
The advanced intermediaries one?
Yes, so advanced materials, which is epoxy, that is about 2 years away. But the performance, as I mentioned, with these projects coming up, where we have increased our caustic capacity, epichlorohydrin, we will be amongst the largest player, the second largest in the country, or at par with the largest in the country. Similarly, hydrogen peroxide. So I think as the capacity ramps up, our years going forward should be much better for the chemicals business.
I'll follow up on the sugar business, because you said the policy impacted your margins. A lot of the sugar companies are increasing their contribution coming in from ethanol, and that is actually making them a lot more immune to these policy-related changes as well. What has your growth here been? What is your contribution from ethanol right now? What is it likely to be? What are the plans here to de-risk the sugar business from this policy change?
So see, we started our ethanol journey somewhere in 2017, 2018. And we are fully integrated as far as ethanol is concerned. We've also added capacities which are on grain-based. So we have total of close to about 550, 560 kiloliters per day kind of a capacity, which is pretty decent. We produce close to about 18 crores liters of ethanol annually. So I think we are pretty well integrated. Now, the growth will be on two fronts for the sugar business. One is on ethanol, but I think that requires some policy support from the government in terms of feedstock, and more so with the grain-based feedstock. Now, how does that pan out? Because we've seen ad hoc announcements which derail, the prospects of investing in a grain-based distillery. That is one. Second, I think is what we are looking at is, sugar is one part of the business. How do we grow other parts of the business in terms of where we can utilize sugar to the maximum in other products? For example, we have gotten into sulfate of potash, we are getting into CBG, and we're looking at more. So it will be like de-risking the business. So that's our thought process on sugar going forward.
Okay, all right, Amit, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's DCM Shriram. That stock is higher by around 0.8%. Just want to